Well, hello everybody. This is Ken Winans from Winans Investments, and this is your third quarter client video. And I certainly hope you're all enjoying the fall, and you'll soon be getting your quarterly reports, and I think most of you will be quite pleased with the results. I know the summertime was a bit volatile, but as we had talked about during that period of time, we picked those opportunities to buy into good stocks and bonds and preferreds and not necessarily run from the market. So looking forward, a couple of things. One, the overall market is still very strong in the United States. I know there's a lot of concerns about the trade war with China and certainly the political issues coming out of Washington about impeachment talks and all this. I would say this, you might want to get a hold of my book, Investment Atlas 2, and go back and look at what happened in past periods of times when those things were happening to give yourself a little historical perspective. But very clearly, the market is climbing a wall of worry, which it is good. Our research continues to be very positive for stocks, bonds, and preferreds. And in fact, overall momentums in the stocks, I would say it is still a stock picker's market. If you take various industry sectors, I can show you companies that are underperforming, and I can show you companies that are overperforming. So trying to find those thoroughbreds is the key to doing well in this market really for the rest of this year. In the bond world and preferred world, you might have read my last Forbes article when I talked about that there are still 6% yields being paid on corporate investments. So that's important for people to keep in mind. I know that many people are asking, what am I primarily watching? Well, the market always has operated on the world of earnings and interest rates. So right now, as long as interest rates continue to at least be low and possibly going lower, and we'll find out short enough how good earnings are as we go through the third quarter earnings season. But we're looking at this as an opportunity to be fully invested. I would say this. Usually, if you clear out September and October and you look at toward November, December, January, there's a very strong historical bias toward the market going up, not down during the holiday season. We used to call it the Santa Claus rallies. So we don't like to go against historical norms, and certainly we'll make a point to be fully invested going into the end of the year. If you haven't already done so, you might want to check out our new website. For those of you who live in the San Francisco Bay Area, you might want to come by and see our new offices that we moved into over this last couple of weeks. And if you're not already doing it, please follow us on LinkedIn and Facebook. I hope you and your families are doing well. And again, we thank you for your business. Please feel free to call us if you have any questions. Bye-bye.